Hello, sir.
Hey, bud, can you hear me?
I can today, yes.
Oh,
All
okay.
right.
Because I turned on my microphone.
Weird how that works.
Yeah.
So,
IT specialist, that's me.
um, I got to tell you, I am impressed
Yeah.
with Greg Kuda.
It is snowing like mad.
Um, how he
Really
gets
snowing.
this whole presentation put together is is pretty impressive. Like I'm sitting here trying to do this, and
Mm.
yeah, it takes a little more effort than what I
And then
am.
Greg do it all?
Yeah, I like that. Greg can do it all. That works out better for me.
Yeah.
Uh,
Do you see that flipping fish he caught?
Shh, we're going to show a picture. That was cool, right?
I've never seen one of those. That was
A
a new
rooster,
data point for me.
rooster fish.
I had no idea there was such a thing.
Have you ever scuba dived?
No.
It's, it is literally a different world down there, man. Uh,
Yeah.
pull up full chart. Come on, get out of the way. Uh, 6 months. Okay. We're getting there. Did he? I don't. Did he text us that or did he email that?
Um, Let me look.
He must have emailed it.
Nope, he texted it.
Huh.
This is a blasted big fish.
Oh, there it is, right there. Okay.
I bet that's fun to catch.
It looks like it would be fun to catch, and then I know that I get so seasick, I would have been miserable out there.
You just drag the thing in. I mean, there's some fish that fight and some that don't, right?
I'm guessing that was a fight, but look how close to shore it is. So that was cool. Come on, get in here. Where are you? Oh, we still got a few minutes. Did that go? Moving stuff around, so easy, right? Um,
That's all right. I'm just looking. I think we're going to see some. I think we're going to see a little activity at the end of the day here.
yeah, why not, right?
Yeah, I think so.
I'm impressed with the um, increase in the contract,
Well, from
uh, the migration.
yeah, I think the big thing is, and I honestly don't know the answer to this, but the 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 long fund Rogers, whatever you want to call them, and I can talk about this, is they they are not allowed to be in no limits in any commodity in any they have like 36 commodities or something. They're always long. They're never allowed to be in no limits. It's in their charter. You can read it online. So that means they have to get out. And would you move to an expiring contract in May? I would imagine that they would move to the new contract.
You'd think.
I mean, I could be wrong, but I wouldn't be surprised if the new contract tomorrow picks up 2,000. I wouldn't be surprised.
Well, I mean, it's got 82. It'll have to get really crazy at the close, I guess.
No, but they a lot of times when they move from one commodity to another, they do it off because they don't want to influence the price because it's so much, right? So they have they have some sort of block trade thing, and they do it in silver, they do it in aluminum. They don't do it by rolling it on the trade because they don't want to influence it. It's I mean, when you have positions like they do, I mean lumber's 1% or something, right? When they move their oil position, it's not done by trading. It's a block deal. There's somebody on the other side.
Come on, where are you?
Kind of like when you move your positions, you don't want to
Exactly.
influence the market, so it's got to be a block deal.
It's more like when I move my car.
Uh,
All right, right there. Why isn't it there? Downloads. Okay. Where are you?
how's your guys' business out of the ports?
Well, it was great, and then it wasn't. It was great, and it wasn't.
Yeah.
Let's see. I'm gonna open that up.
Is it tough to get in and out of there? As in woods on the ground, but
It can be. I'm sorry. I'm just trying to copy. Let me see it. File. Save. I don't want that file. Save as. There we go. Now I should be able to find this. Starts with an A. Okay. Ha ha. I am ready to go, believe it or not. All right, let's do this. It is welcome to Lumber Futures from the Free Seeds time. And as you can see, Greg Kuda is not here, and I am building his. There we go. Lumber Futures from the Free Seats. Welcome, everyone. Kip Fothington has joined me today. Greg Kuda is sent us a report from Mexico about the fishing conditions. And oops, there they are. So Greg is taking a much needed vacation. That is a rooster fish, and I believe he's down in Cabo.
Yeah.
But congrats on number one, a vacation, but more importantly, congrats on what a great fish.
Yeah, beautiful.
Yeah. So let's jump right into it. Start off like Greg does. Let's talk about the things affecting the market, interest rates. And, it's kind of the same old story. They're higher than what they were in recent memory. But look, we're flatlined since the beginning of December here for the most part. I guess, slightly higher. February, the inflation numbers have come out not so good. So interest rates have ticked back up. We can jump over here. I pulled this chart out and I found it kind of fascinating. The size of the drops with this being kind of the only exception in January, the financial crisis back around, you know, uh, we've had a pretty solid drop. Now, this is coming off a massive jump, but you know, the relative position of inflation is still quite high. But in the past, when you've had these big drops, it generally means things are not going so well. So you can even look at, I think they're highlighting this might have been a bit of recession. This was obviously a recession. Um, so yeah, what do you think of the CPI? Like, what, Kip?
Well, I think the relatively small drop there. I think um, that was the COVID. But it's a very strange thing when you remove food and you remove energy, which is the two things that you
Yeah,
have to have. Like
right.
used cars, like you don't have to have those. You have to have food and energy. So it seems odd to me that they do remove them. But at the same time, I mean, it's very, very obvious. Canada, we are a little bit ahead of you guys, and they have stopped raising interest rates, um, and they're talking about starting to reduce them. And the home index we have up here is not quite the same as yours, but it was up very hard in February. So people are getting more interested in buying houses up here.
Right.
So we may be a little bit ahead of you. On the other hand, if you are raising interest rates in the US, we have two choices. If we don't in Canada, because we're, 1/100th the size of your capital markets, then our dollar has to drop. So that's
Well,
what there's only
one of
one
the
choice there, right?
one of the things you did do to spur the purchase of houses by Canadians is stop letting the foreigners buy the houses.
Yeah, it is a bit of a misnomer. It's not as many as you think, but the big thing is in certain areas, especially in the eastern side of the country, you get you get condo buildings, and like a third or 40%, Mike, are investors.
That's
They're
wild.
not buying it for themselves. And so you have, people want to buy a new home, and they're having to rent it because these people are picking them all off. And that's actually a bigger deal than the foreign investor thing is we have people just buying, they're using the equity in their home, and they're buying two or three houses, and that's not really the point, right? It's kind of like
I
your rent for home thing. It's kind of like you don't want to compete with someone who's buying 500 homes to rent them because you're going to lose
this is true. And
every time.
Friday, I was on Matt Lehman's roundtable, which shameless plug for Matt Lehman, but highly recommend jumping on this. Um, there was a builder in Indiana who has a 17-month project. The number popping into my head right now is 281 homes, all built for rent. So
Yeah.
it's, there's a shift going on. I don't know how much of it's going to impact anything, but there's for sure a shift of the idea of, if you're a investor in housing, you can only build condos, to look, you can build full developments of houses and rent them out.
Yeah, absolutely.
But the heartwarming thing on this chart, look, the line is heading in the right direction. It's still in the wrong place, but it's heading in the right direction.
Yeah, we're making progress.
This one, this one says everything to me. This is percent change in real hourly and weekly earnings, private sector employees. Um, just everyone was very rich back in from 2020, right after the pandemic kind of kicked off, until 2022. Then all of a sudden we got poor. Inflation makes us poor, but it's coming back, and this is a function of the wages are going up and inflation is coming down just a little bit. But you know, when
And I think the Fed chairman said, like when COVID hit, it's like 4 million people, 2 million people left the workforce. And I don't understand how you leave the workforce, but they left the workforce. And 2 million people retired early. So and all of those people had skills and jobs, and they could be pilots or they could be
sure,
all sorts of things, right?
sure,
And they left the workforce. And then, you had a little bit of a push on immigration, which is generally the lower paying jobs where you don't need to have job skills. And the result is wage inflation. And it's anybody who doesn't see that. I mean, you can't have 4 million people, stop working for whatever reason who all have talent. How do you replace that?
you try to use
And
as
we're
much
seeing we're
technology.
seeing how you replace that. You don't.
Yes,
Ever had a flight canceled recently? Yeah, there's a reason.
there's no doubt about that. Um, Housing cools further. This was on Bloomberg today. It was the Case-Shiller price index. It's down 2.7 from its peak. None of this is a shocker. Uh, I'm showing these 4 slides to say, oh, bad, doom, gloom. The way I look at this is the majority of the production is in the hands of corporations and corporate type companies who have a board of directors making decisions and upper management making decisions about how much production they will put on. They generally can't make a decision on a whim or a gut instinct. They need data. And I think I've been harping on this for a little while. This is the data they need to say, okay, look, it's not as good as we had anticipated or as, we thought 12 months ago, 6 months ago. We need to make a change. What are you hearing up there in Canada and around about production?
Well, so here's a couple of numbers. One is we have a 60 billion foot lumber market total and all species. And about a third of that is new homes, whether it's multifamily or single family. So let's just say that housing is down 10%, which is probably a bit egregious because multifamily is up. But if it is, so we kind of need to lose somewhere around 2 billion feet to make everything equal, assuming that the rest of this year is exactly like January and February when half the country,
Right.
including here, right, including
Yep.
here, is covered in snow, right, which I don't think is going to continue. So last year, we lost 1.1 billion feet from Canada. We gained 400,000 feet from Europe. So net 700 minus. This year, I think it's very reasonable out of Canada, maybe a little bit in yellow pine, but mainly out of Canada, including the East. We now have Eastern mills taking downtime. Um, if we lose a billion feet, that's going to be pretty close to equilibrium if housing is even a tiny bit better than what everyone thinks today. We're not going to be at 400 bucks. We'd be 500, 600, 700, whatever. We're not going to be at 400 bucks because they are going to take curtailments and some of them will be forever. I mean, there's a bunch of mills, Tolco and other guys who haven't run their mills since November. At 400 bucks, we're never going to see those mills again. They're just not. So, I think there's a case you could make that in Q2 and moving forward, that where most of the curtailments that we're hearing about, pulp mills going down, Canfor, et cetera, those are all going to happen in Q2
Okay.
and including Resolute in the East. And, I'm sure there's some Interfor stuff, whatever. It's going to happen in Q2. There's a very good chance that we're a little bit better on demand. New home sales, when no one wants to sell their house because they have a 3% mortgage,
Correct.
the only house that you can buy is a new house. And
Yep.
those boys can figure it out. They've been making 28% margins for years. Can they make 20% margins? They've said they can. They just got to shrink it a little bit. Maybe your countertop isn't an inch of quartz, maybe it's half an inch. Like they have levers to do that.
Well,
And
and
I think there's a good chance that this is the worst quarter this year. Very good
and
chance.
going back to what you said, is they can make a less expensive house. That's been, the mantra. How do we get more affordable housing? You build a cheaper house,
Okay.
right?
Make it 5% smaller, right? Put in a 2-car garage, whatever. They have the levers to do that. I mean, it's not like they've been making 10% gross margins. They've been making a fortune.
For sure.
And like Toll Brothers came out and said their orders in January were the most in 10 years. Now they're not the cheapest houses. Let's be honest.
No, of
They're
course.
probably like 750, 800. But they are seeing some business. So I'm not as draconian as some people.
So I agree. We looked at these last few data points, and it's all about the demand side. And look, demand is definitely going to be off, but it's not falling off a cliff, is what we've kind of come to the conclusion. And I think now the producers have in their hands the data points they need to make decisions. All right, let's get into the market basis, yearly basis. Negative. Wow, what a wild ride we've had here. I gotta make sure I'm looking everything. We had a basis trading opportunity selling futures, and I talked to several people and encouraged them to get in the trade. And one of their concerns was, oh, it takes forever to get out of it. Just wait a week, evidently, and now you can exit your basis.
Well, I mean, you look at. I mean, there's a couple things about basis trading now today. One of them is when you have, generally you have to put the wood on the ground. That's the way you're supposed to do it. It's much more expensive today to have the wood on the ground in a reload. It's not $8 a month anymore, right? It's much more expensive. And if you have it in the port, it's way more
Way
expensive,
more expensive.
right? But I mean, today you've got, May's up limit. And if you could buy cash at 380, I mean, you're sitting at $45. That's probably not enough for everybody, but it's heading there.
You
You
know,
get $60. And the one thing about basis trading is you're buying with the wood. You don't really deep down have any risk that you're going to lose money. You might not make the $60, but you're not going to lose money. And in this environment with the volatility we've had, and a lot of people pulling the reins back, whether it's the CFO or the sales manager, if you can say I can put 30 cars on the ground and I'm not going to lose money, that's a pretty big thing today.
and then there's a different way to make money off that wood. Roll your position.
Yeah.
Um, if you get a good order for a prompt shipping load, you can take it. If it's not a good order, you don't have to take it. You're hedged.
Yeah. Very true.
So I'm a big proponent of selling from a place that you have, selling from a position of wood, selling when you have it on the ground. Definitely makes it easier. So look, right now there's no real basis opportunity. The forward price opportunities, we'll see in just a second, is a little iffy. This must be the May, I think. I'm not sure what that chart was.
Yeah.
So here we're back to this is the Western 2x4 number 2 and better cash versus CME futures. obviously, we've just come out of this kind of wild ride. Um, but I think we could see these positive basis opportunities happening again and again.
Well, and the one thing that a lot of guys spend a lot of time on is what you want to do is you want to buy the thing that historically is cheap that you can buy today nowhere near print. And I'll use an example. 2x4 16s delivered in the southeast, off of print are around 575 to 600 bucks delivered.
Yep.
If you could go buy some euro at 450 and basis trade that, I mean that's how you can really make some money.
Correct.
And you don't have the risk, right? You're not losing on that trade. If you do, you definitely need to find something else to do.
Well, it's timing. Basis trading is actually rather boring because most of the time you're sitting there waiting for something to happen, and then when the window of opportunity opens up, you have to react, which means
Yeah,
getting
you can
into it
flush
and
it out.
getting out of it.
Yeah.
And what I'm very excited about the new contract being a truckload contract. It's much easier to basis trade because it's a 1-to-1 if you're selling truckloads off the ground.
You don't have to buy
So
4 trucks for a car all the time. Yeah.
yeah, it'll definitely make it easier. Um, looking at rail car, this is the time of the year when everyone starts to say, "Oh, the market's going higher because all the rail cars are stuck under a pile of snow." Well, that doesn't seem to be the case. Um, in previous years we've seen that, but it seems like transportation is going just fine. These charts on the right are a little difficult to look at, but the blue line, this one that ends kind of right here, is the 2023 for Canada Forest Products originated. Looks like it's sort of middle of the road. Definitely off from the best, but not the worst. The U.S. is a little interesting to me. The U.S. is definitely running lower. I wonder what do you know, or what do you think of that?
Well, I think there's a couple of things. One, on the Canadian side, like shockingly, the service has gotten better when they've charged 10% more. So you're going down to, Southern Texas now. It's 150 bucks.
Yeah,
Like they're just charging more and you're getting better service. On the US side, especially up and down the Pacific coast, there's a lot of times right now where trucking is more competitive than rail.
yeah,
Like quite a bit more competitive, like in the, 15 to $20 a thousand. So, that's going to slow down your rail originations because you just truck it and there's lots of trucks available at this time of year. Why
yeah.
wouldn't you do that?
We've got some of the mills in the plains that are shipping trucks all the way to Texas.
Yeah.
The Canadian plains, right? Um,
Go ahead.
it's
Yeah, from
faster.
Alberta. I mean, that's very definitely a possibility to ship a truck as opposed to rail.
Yeah, that's a good point. I bet that has a lot to do with this as well. Even the Southern Yellow Pine, I know we're getting trucks moving north that out of the south that are a lot less expensive than they were a year ago, for sure.
Yeah, absolutely.
Um, all right, the forward curve on lumber. Well, this is the bottom one is the old contract. It's pretty short,
Yeah,
um, but
very
everything
short.
very short. Everything looks fairly normal here. Um, I think that this is probably going to flatten out a little more as we get a little more interest in this contract. But risk management is, I don't want to say expensive, but you have to pay for it in this market or in the environment we're
Yeah.
currently there. Um,
Yeah, I mean, one thing I think is what you're getting, and I don't know the answer to this, but if you are a long fund, Rogers roll, whatever, you're a short fund, do you want to go into the May there, you have at 431, which is an expiring contract, and then you have to get out, or do you make some sort of deal, um, block trade off off the platform to move your position to the mini contract, and all of a sudden in 2 days it goes. I mean, if you talk about it, let's just take a Rogers roll. They've got 500 longs. So if they move to May, the mini contract, that's an instant 2,000. And all of a sudden, your liquidity really starts to pick up. And I wouldn't be surprised if that happens fairly soon, as opposed to maybe they move to the May, but they have to get out of the May into the July. And I don't personally know if I would want to have a large position in an expiring May contract.
Um,
That would be risky to me.
it it's going to get
I don't
dicey.
have 500 contracts, so I don't have this problem. But I would take that as a bit risky.
It is definitely going to get a little dicey.
Yeah.
All right. The CME lumber seasonal current is green. Absent of the previous 2 years, it's looking fairly normal. The one thing I look at in this and say, what about inflation? We do know that energy, a lot of things cost more for the mills. Their bottom line or their shutdown price is higher. So I think the green line has more opportunity to go above higher than it does lower.
Right. And the other thing, and I think we've talked about it before, is 10 years ago, the top the top 50% of production in North America was 32 sawmills. Today, that same percentage is 10. And the reason you get scale, you do that, obviously your costs go down, but it also gives you the ability to make the market a bit where you don't, if there's 32 guys, they're never going to agree on who's going to take downtime. It's going to be last man standing. Now, when there's only 10 of you and that number is going to go down, um, it's there's more reason to rationalize your production to not lose money. That's kind of why you do it.
Yep.
Right? If you're just going to just go lose money and run at $350, then why are you acquiring these other mills? It gives you an opportunity to affect the market pricing. I'd be surprised if they didn't do it. Well, they are, but I'd be surprised if there's not more.
And the next chart, jumped one here. This is what was that price? What is this one? I don't know what the difference between these charts is, and I put them on here.
Yeah, that's the one you just talked about, which is, other than the last 2 years, and then that's the 3 and 5 year,
Okay.
and you can kind of see it. Yeah, there you go. So we tend to make, sometime in April or May, occasionally in March, but because we're down, I would say the odds this year of making a high in May, whatever it may be, is probably pretty damn good. Whatever it may be, it could be, it's not going to be $400. I can tell you that. Is it going to be 500, 600, 700? I don't know. But the mills are not just going to keep pouring it out. I
Right.
mean,
And
they're
one of the
they're
things
destroying their earnings for no particular reason.
we're going to have to get used to, Kip, is if we're talking lumber futures, $400 doesn't matter anymore. It's what's the price
No.
delivered Chicago, right?
Yeah.
So looking at where May is right now, it's trading around 550 Chicago,
Yeah.
which makes sense because the legacy May is trading around 440, 435, 440, 435. So yeah, the new speak delivered Chicago, which of course wraps in the Western Canadian, Eastern Canadian, and Western U.S. species. So let's jump to, let me get rid of this. Get rid of that. Commitment of Traders report. And I'm
Hold
sure.
on.
Oh, can you see the screen? Yep.
Yeah.
So the CFTC had a problem. And the problem was there is one major vendor that all of the clearing firms use to manage their back office, and they had a cyber attack and were unable to provide what they felt were accurate data, price data.
Yeah.
So the Commitment of Traders report was delayed, unfortunately for all of us, because it happened at a time when there was a lot of change. And let's take a quick look. You go to cftc.gov, you come over here to market, this section, market data and economic analysis. You choose the Commitment of Traders. I go to, well, the lumber is in metals and others. I should make this a little bigger. I just look at the short format, and it gives you this kind of gibberish, and you have to scroll down, down, down. Right below hot rolled steel. And here's lumber. So I'm going to highlight this. The big thing here is we've been watching this managed money section, which is the funds, of course, right? And wasn't there a time where the funds had zero longs, if I remember correct?
So this is 3 weeks ago,
This is 3 weeks
right?
ago.
January, because they've screwed it up. There was a point where there was 100 longs, and this is when we were at, I'm going to say 380, 370, and they had 2,000 shorts. And shockingly, they covered their shorts, and we went from 360 to 535. And with all short covering rallies, when the last guy is done, there is a massive air pocket, and we dropped back down to 375. The interesting thing is on the way down, the commodity funds who are long have been adding to their position. And you can see that in that the open interest has been increasing every day. So this number here of 560, that's 3 weeks ago. I'll
Correct.
bet you that number is well over 1,000, and they are going long. And it could be a US dollar play. I mean, the US dollar has been a little bit weaker. I don't know, but it's no longer them going short. They are now going long. And to what degree, I don't know, because this is 3 weeks. But I will bet you in the next 3 weeks, every time this comes out, that long position from the commodity funds is going to be going up.
Yep. And if you look, it's the mirror image.
I'm just saying that's exactly what it looks like. Is they have gone from short to long on lumber.
And you look at the producer, the industry is the mirror image of this. There's hedging going on, which of course you're going to see this number have probably increased significantly as basis trades and just mill hedging going on. And the longs, people liquidated out of their long positions.
Yeah.
All right.
I mean, the industry should have been short. I mean, we're probably 425 on cash. I mean, it printed at 460, but that was 3 cars. And the board was at 525. There's $100 basis sitting there.
Oh,
I would hope the industry is shorting it.
So January 31st is right here. How about that?
Shocking.
Shocking. Yeah. So now the data in this it's not on a single day. This is over the course of a week.
So, yeah, it's a week. Well, it's Tuesday, isn't it? It's Tuesday.
Well, this was as of the 31st of January, which wasn't in fact a Tuesday.
Yeah.
So correct. We can come back here and we can say in this section So we can back up 5 days. 1, 2, 3, 4, 5. Sure enough, the breakout, which made sense because from a technical standpoint, the funds were not getting out until they were proven wrong. And they were proven wrong right here on this breakout.
Correct.
Then they start to cover their short positions, and they were looking for people that were willing to sell them contracts because they were short. They wanted to buy them back. Those people were very hard to come by, and the market rallied strong into the 1st of February. The music stopped. There were not enough chairs on the dance floor, and
There was no chairs.
There were no chairs.
Yeah,
This is true.
dance floor without chairs.
This was a remarkable pullback. Not surprising. Like, it's easy to explain, but in the midst of it, it was pretty remarkable. And then, sure, we came down to this point. I think we'll see in the data, everyone kind of did what they needed to get done. Now we've taken off again, obviously. Looking at this chart, what are some of like the technical things that you're looking for?
I mean, you'd like to see cash start to catch a gear. And I don't think that's happened yet. I mean, there's been some deals done, and that's how you bottom a market. But technically, it would be if we could make a new high here, and maybe not quite at the pace with all those gaps before when the funds blow out. But if we have commodity funds actively getting long in lumber, we could easily be above $500. Easily. No reason why not? And then you'd probably get some basis trading, which gets the mills some orders. Maybe the mills at $500, I would think some of the mills in Canada would start hedging. It's probably close enough. I mean, they were just selling at 350. So, take some business up there. And then they get an order file, and we'll see what happens in the second quarter.
So things that I look at from technical analysis. Actually, this chart, I'd rather have the continuation chart. Let me bring that up. Intraday, daily nearby. Okay. The biggest indicator that I look for in a changing market, higher lows. Well, lower highs or higher lows. So this is the big low, January 6th. We make our run, we come back, we don't make it to that low. Well, I'm not totally concerned yet until we make another run at it and don't get there.
Yeah.
This move right here is the big indicator to me. And in fact, of course, the hindsight's 2020. We've come shooting out of the hole here. So you could say the trend has been broken. The downtrend. Now, does it mean we're going anywhere special? Well, from a technical standpoint, I look for gaps next. And, there's this gap right here, which is from 464 to 469. What are we, $30 away from that? The other thing I like about that is lumber tends to retrace to 50%. So if I think Fibonacci retracement here. Yeah, that 50% comes in right at around just under 460. So, a lot of stuff is pointing to this area right in here. Then you watch for that. If we blow through that, well, then the obvious next target is 533.
The high. Yeah.
If we blow through that, then you got to take a look and say, okay, man, we're not going sideways. We could be going higher.
Yeah. And it'll probably, I would think that's probably some of that may be boosted by downtime.
Correct.
Instead of the list being 5 pages, now the list is 3 pages, and the stuff that you were buying at a screaming discount is not there anymore. That's probably what gets you going like that.
And now we take a look at the weekly nearby, and if we go to let's say we go to 550 and fail, from a weekly standpoint, it just looks like a sideways market. It doesn't feel like it, of course, at the time, but it will just look like a sideways market. All right. That's about what I have to cover today. Let's take a look at open interest. I'm sorry. That's the one last thing I want. CME Group. We are in that weird time, of course, where there's two lumber products. So we look for random length lumber futures. This is going to show you what we call the legacy contract. And you can come in here and you look at the volume and open interest. This is from yesterday. We still had 700 open contracts in March, 1,700 in May, a total of 2,400. It's gone up. So that both, when you add in,
the other one, I think it's around 3,000. I'm just going.
Well, we'll take a quick look at that. So then if you want to see the other contract, you need to look up, I just put in LBR. Enter, sorry. Come on now, here we go. And volume and open interest right here again. The open interest is this blue line as it continues to pick up speed. Come down here, 1,200 divided by 4 is 300, so 2,700 or so.
Yeah.
Picked up 73 contracts yesterday, all in the May here. So the volume was good yesterday. The open interest went up, and it was a rising day. That confirms the move.
Yeah.
All right, that's what I got. Kip, thank you. Any last words of wisdom?
No, just it was nice to learn what a roosterfish was from Greg. Never seen one of those before, and yeah, you learn something new every day.
This is true. I think my biggest takeaway of the market is I truly believe we've bottomed. I think we've shown where the pain point is for the mills and where the interest in demand in buying is. What we're hearing from the grapevine is there's not a lot of faith in the market from the demand side. But those are the markets that can fool you a lot of times. And what scares me is when the market's not moving and everyone says it's gonna.
I mean, between all the other stuff going on, I do believe that Q2 is going to be better than Q1. Weather, curtailments, business. I just do. How much better? I mean, that's certainly up for debate, but I don't think there's a single person out there that is building inventory for a better Q2 or Q3. They want to see it from the whites of their eyes first, and that sometimes leads to markets going further than you think.
Now, the last thing I'll just make a comment on, it's generally not what you know or the data in front of you that makes the difference. It's something unforeseen. I think there are some geopolitical issues going on right now that could, rear their head.
Hopefully not.
Hopefully not. And you know what? The U.S. Fed if they're not getting done what they want to have done with interest rates, I don't think they're afraid to jack those rates higher. Like I think they've come out and said that. So I like your thoughts on Q2, Q3. I need more data before I can make a good call on Q3.
Yeah, fair enough.
All right, everyone. Greg will be back next week. So everyone, take care, and we'll see you next week. Thanks, Kip.
All right. Cheers.